Welcome to the Crypto Traders Podcast, simplifying cryptocurrency for traders and investors around the world. Subscribe for interviews with developers, market updates, and a professional look at the future of money. You've come to trust Matthew and Kurt to filter out the noise across social media. Now you can listen on the go. Without further ado, here's the Crypto Traders Podcast.
Hello, everybody. Welcome to the Crypto Traders Podcast, available on iTunes, Stitcher, SoundCloud, Google, Amazon, and everywhere else where podcasts are consumed. We are joined today by David Kemmerer and Lucas Weiland from Crypto Trader.Tax. I need to clarify, this is a paid advertisement, and nobody involved is a financial advisor, a tax advisor, legal advisor, anything. You need to do your own research, be your own boss, and be responsible for all of your own decision-making. So please consume this podcast under the auspices of being very, very responsible and learning. This is an educational podcast. So David, Lucas, how are you guys doing?
Doing good. Thanks for having us, guys.
Absolutely. Let's start right out the gate. What is your background? I'm going to start with you, David. How did you get involved in Bitcoin? What was your journey?
Yeah, I mean, I was like most of the people who got in. I got in the fall of 2017 when everything was good, the grass is green, and everything was just up and to the right, and everyone was losing their minds. So I was one of those people. Got in, started just buying, and holding, and then got into the trading side and actually started diving into the market making kind of automated trading strategies, which is actually how I linked up with Lucas, who's also on the phone. But yeah, I wasn't like an early adopter. I didn't know about it back in 2010, but got in it and really liked it. So that's kind of how I got started in crypto.
Cool. And so as you can tell from those different kinds of market making strategies, you're making tens of thousands of trades per year. And where Crypto Trader.Tax came from was just from that, basically impossible to do any of that by hand. So we built it as a way initially for us to automate that whole process.
Cool. How did you guys, do you have a programming background? How did you get into doing automated trading? That sounds a little complex basically, do you have a financial background, or is somebody in the family like a trader at the New York Stock Exchange or something?
Both myself and Mitchell, the other co-founder, come from a programming and software engineering background.
Okay. Very cool.
Yeah.
So,
and I come from a finance background, originally. Not a programmer myself, but found my way into the software world.
Yeah. It takes all kinds.
So what made you guys want to come up with the idea of Crypto Trader.Tax?
Yeah, it's a good question. So kind of like we hit on, so we got started in the market making world, right? So trying to automate strategies to trade on the spreads, of these fluctuating assets and, make that spread. And quickly ran into, I think it was somewhere on Reddit where I first read about how, crypto has tax implications, right? And so essentially anytime you trade one coin into another coin, you trigger a taxable event in the eyes of the IRS, right? We're talking about the United States here. Can't be speaking to other jurisdictions' tax laws right now. Anyways, but you trigger a taxable event anytime you go coin to coin. So if you're on Binance, trading, whatever it might be, Bitcoin into Ethereum, right there, you trigger a taxable event. So you need to report what the fair value in US dollars of that asset was at the time of that trade. So then you go, for these market makers who are making hundreds, if not thousands of trades every single month, right? Having to report every single one of these coin-to-coin trades is literally impossible to do by hand. And so I remember being on some Reddit thread, I think it's still out there. It was like, how the F does the IRS expect me to report any of this? And I started just diving in and I got all worried, I was super stressed out, being like, holy crap, this is what we've been doing for the past 3 months. We have no record of, if we ever blow up, and, do very well, it's going to be impossible to cover our asses to say, and actually, walk away in a fair sense without being at risk of, getting in trouble with the law.
Sure.
And so we ran into that problem, ultimately decided, wow, a lot of people are having this problem. So maybe it makes more sense for us to take our software engineering talent of Lucas and Mitchell, right, who are on the phone, and, maybe try to build a solution for this problem and help a lot of people who are having it, right? So it was really, we had the problem ourselves, and then we just tried to build something to solve it. That's kind of the genesis story.
Sure. I always use the phrase, the tyranny of ambiguity. And I think people are, like you said, you read about a law and you're like, oh man, nobody even asked for my documents to open a Binance account, or, not like, am I in trouble? And I think people then take that and say, well, I better over report or whatever in order to stay away from the big bad IRS. And I think,
yeah, it's a tough situation because, when you get into it, exactly to your point, no one tells you that like this is taxable, and it's kind of unfortunate, right? Because it does hurt the overall adoption of crypto, right? And so that kind of speaks to the goal of this company is like, we want to make it easy for people to be able to trade, so they're not worried about, well, I can't trade because I can't report this stuff on my taxes, right? The goal is, well, let's make crypto more accessible and provide this tool that's going to make it easy to then stay in the good graces of the law. So, it is that kind of that sad, like, well, a lot of people don't realize kind of what they're getting into, but the goal is to just make it easier.
Sure. So is Crypto Trader.Tax is it self-serve or is it one of these things where you create a relationship and you'll have an accountant through the system, or what is the general experience of one of your clients? How do they start and where does it go?
Yeah, it's a good question. And so when we were building it out, right, and there's a lot of different, solutions and advertisements that are trying to capitalize on this market, right? We want it to be very affordable, right? And so it's completely self-service, right? You could very much compare it to the TurboTax of cryptocurrency, right? You just make an account, import all of your trades, and then the software is going to crunch and generate the necessary tax documents for you that you'll be required to file. And so it makes it very seamless, but it's all self-serve, just $40 right now, to run your reports. But the best way to compare it to is that, TurboTax, right? That self-service tax software.
Sure. And then do you have experts if you need to answer other questions, or if you have more complex, like let's say I'm a market maker and didn't know all the trouble I was causing. How do we go from there?
Yeah, we do. So, that's a big thing that a lot of our customers come to. Some people have very, very complicated scenarios, right? They're mining, they're, doing a whole bunch of stuff. Mining's not that complicated. That's a bad example. But just let's say they have all this stuff and it's maybe a bit more complicated than handling it themselves. So we have one of the largest directories of just crypto tax professionals who we've vetted out and now we list on our platform. So we don't monetize that at all. We don't make money on that, but it's just a resource for traders. If, maybe they do want that hand holding service, they can call one of these people up. Now, obviously going with that type of option is going to be a lot more expensive. So it's kind of nice to have both options, but we do kind of provide that support.
Sure.
So I'm curious, if I log on to Crypto Trader.Tax and I want to start doing my taxes, do I have to log into my Binance account? So you guys would have to access that and pull my records, or how would that work?
I can jump in and handle this one. So kind of our principle when developing this was to give the user a choice either way. If the user wants to go through like the API import route, they can generate a read-only API key and we'll import everything automatically. But we also like giving the user giving the user as much privacy as possible. So they can download their trade history files and upload it that way as well.
Okay. Interesting. So both options.
Exactly.
Very cool.
Does it work with more than just Binance? Does it work with Coinbase or Poloniex or Bittrex or?
It works with actually all of those. That's like one of the unique problems actually kind of in the crypto space right now. It's not like with regular stock trading where you open up an E-Trade account, you get all your tax documents there. You're sending coins back and forth between exchanges, looking for arbitrage opportunities, stuff like that. So we will aggregate all your trades together from all those exchanges, and then peg each of those trades to a USD fair market value.
Interesting. Is it only using the
Yeah.
exchange data, or do you guys also use blockchain data? Because like you mentioned arbitrage, for example. So if I'm sending Litecoin between 3 exchanges all day, I feel like some of that could get really complicated just using the just using the exchange data. So does the blockchain itself provide you data for tax purposes?
Right now, since we're pulling it directly from the exchange that it's traded on, we use that data straight from the exchange to provide the most accurate price value at the time of the trade and for which exchange it was traded on.
Okay. Yeah, that was going to be my next question. If the price is 10% different between 2 exchanges, can we go off the cost basis from wherever it's cheapest or whatever? So is that not an option?
It currently gets mapped over to the exchange that you perform the trade on.
Sure. Very cool.
And Lucas actually hits on, another piece of this problem, and it's the reason why like exchanges cannot provide accurate tax documents. So I know it's a very common question, and I heard it from your users, right? And it's scaring a whole bunch of people, right? You got a 1099K from Coinbase, right? And that looks nothing like your trading activity, right? We hear it all the time. And that's because exchanges cannot provide accurate tax data for anyone who had any type of cryptocurrency activity outside of that exchange. So it's a huge problem they're running into. And that's because, right, let's say I bought Bitcoin on Bittrex, okay? Then I sent it to Binance, maybe because there was some different assets that I want to trade into. And ultimately I sent it into Coinbase to cash out, right? Coinbase cannot, right, with that data, know your initial cost basis for that first buy on Bittrex, right? So you need to aggregate all the data across every exchange trading platform that you used to get accurate tax data. So it's also a huge problem right now for the exchanges because they're under pressure by, different, what do you call them, agencies and things, right, to stay in line with the law and provide their users with this data. But I mean, they just can't do it. And that's the nature of blockchain, right, and crypto. We could get into Robinhood, right? They don't operate like a true exchange. So they actually are able to give accurate tax documents, but that's because they don't let you transfer your crypto around.
Right.
You can only get it through them, right? And so it becomes this multifaceted problem that is tough to solve, and you do need some type of aggregating service, right?
Mm-hmm. No, absolutely. That's it's so complicated, and it really, given that we're in the trading business, and we have people that come to us as educators and say, hey, how do we get involved in trading? How can we make money here? And then we inevitably get that like, hey, by the way, what do we do about the tax implications of all of this? And frankly, we have to say like, well, it's hire a good accountant and good luck. So
right, exactly.
Yeah.
And that's the tough part is the people who, right? Because let's be honest, all right, we estimate that maybe 10% of people are paying taxes on this stuff, right? And for those people, right, it seems like the only option is to go with a $2,000 accountant that's going to charge. And like what we're trying to do is show them, hey, that's not necessarily the option, right? If you're semi-savvy into how to handle this stuff, you can just pump it into a platform like ours. $40 later, you have your full tax documents. And oh, by the way, you can go ahead and upload those into TurboTax and it'll file for you. So we're trying to make it easier. We're trying to get the word out, right? Hence being on the podcast, but
absolutely,
it's not easy.
No, I understand. It's not easy for us either.
Yeah, I think something in our community that a lot of people were having issues with is they were going to their local accountant because they have normal W-2 jobs and their accountant has no idea how to treat cryptocurrency. And they're not offering a solution. So I think this would be a great solution for those people that have accountants that are a little more old school and don't quite understand this market yet.
Yep, you're hitting on it again. It's the traders actually through all their research right into this stuff. They know more about the tax implications than most accountants. Right? It's kind of this weird scenario, right? Because 80% and probably more than that, right? Of these accountants, they don't know what virtual currency is or how the law treats it, right? And so this market is in such a weird place where the traders are self-servicing themselves. So again, it's trying to provide them that tool to be able to do that.
Mm-hmm. So is it, yeah, I'm going through some of the questions that we had predetermined here and talked about. I'm curious, is there ever a scenario where a trader wouldn't owe taxes or wouldn't owe the information on a tax return? Like, let's say I bought $500, lost all my money, and closed my account. Does that need to be reported, or is there some kind of a basic threshold that people can just say, okay, I'm not really a client opportunity here?
Mm-hmm. Yeah, there are definitely specific scenarios where you don't incur taxes, okay? Mm-hmm. And so I can run through some of them, but the IRS actually gave a pretty detailed list of what is and what is not considered a taxable event. And we'll go ahead and, give you guys that info. I think we already sent it over for you guys to publish on the blog. Yeah. But let's go through a couple examples. So I bought Bitcoin via Coinbase, and I'm just holding on to it, right? Haven't done anything with it. I bought into the hype, and I'm waiting for it to go to $1 million, right? Well, you don't have any tax liability at that point, right? It'd be the same as buying a stock, right? You don't incur a gain or loss until you sell that asset or trade it into another coin. So if you literally just bought it and are holding it, you don't owe a tax on it. Another misconception is if you transfer it to an offline wallet or to another exchange, a transfer is not a taxable event. We get a ton of questions about that. So again, if I just send that Bitcoin to Binance, but I'm still just holding that Bitcoin, still haven't incurred any tax liability, don't need to report it. It's when you start trading coin to coin or you cash out to US dollars. Those are primarily the taxable events. Lucas, I don't know if you want to hit on anything else, but that's typically what we see most often.
Sure. Just one other kind of scenario I wanted to jump in on. And kind of clarify, wallet transfers from your own wallets or your own exchange wallets are not taxable. But if you're sending, like 5 Bitcoin to like a car dealership to buy a car, that will actually realize those gains and will need to be reported.
Okay.
By the user or the car dealership?
By both, actually. So when you are paying for goods or services, that counts as a taxable event and will realize your gain or loss on those initial Bitcoins.
Interesting. So what about losses? Can we save money if you're just, let's say you're a really bad trader and every time you enter a trade, you just get wrecked again and again and again? Is there a way to recoup some of those losses from a tax standpoint?
Yeah. Yep. In short, there is. And that's, the draw of a service like ours, especially this season, because so many people did have those losses. And so crypto is treated as property in the eyes of the IRS. And, a lot of these people have probably read that, right? Other things that are property are like, stocks, bonds, real estate. So when you incur a loss, right, that can be written off on your taxes. Now, let's go through a couple examples to make it a little more clear, okay? So let's say I purchased, we're just going to keep it general, Bitcoin in February of 2018, right? Let's say I bought $5,000 worth. Mm-hmm. Now, let's say throughout my trading, right, I was on Binance going from coin to coin to coin, ended up down $2,000. So you'll import those trades, right, spit it back out, and anytime you incur a loss, that's going to affect your net gains on your 8949. So you can deduct those gains up to $3,000 of normal income. So let's say I made $50,000 from my normal salary job. Well, that $2,000 loss would be deducted from that $50K before it's taxed. So essentially you get a tax shield of $2,000 that's no longer going to be taxed. So you can save a substantial amount of money. Now, where you can save even more is if you're tax loss harvesting. And it's a common strategy among, hedge funds and stock traders, right? It's where you're going to sell your biggest lost assets to realize the loss. Because keep in mind, if you're just holding, you haven't realized the loss. So a lot of people, come December 31st, the end of the year, they will sell or trade into another coin to realize the loss.
Yeah.
Another quick thing to hit on this, right? Saving money is, let's say you have capital gains in other areas of your life, right? Let's say I'm a stock trader and I made $20,000 last year, 2018, maybe I bought, I don't know what went up big last year, but some stock, right? And I'm up a big amount of money. So that's a capital gain on property, right? So if I have 20K of losses in crypto and I realize those losses, well, the capital gain of the 20K in the stock market and the capital loss of the 20K in crypto will completely offset. So you have no tax liability. So, that's where the savings can be enormous, right? And if you do clever tax loss harvesting or, intentionally sell some high gain assets to be able to offset some of those crypto losses, you can see some massive savings.
Sure. And that's very helpful.
I had a question because, Bitcoin has been going down a lot in 2018, but what if you made profit in Bitcoin, but the value of Bitcoin actually dropped? So you might have lost USD value, but you gained Satoshi. Would that be counting as a gain from a tax perspective?
Okay, just so we're clear, could you go through the example again? I think I understand what you mean, but
Sure.
Just so we're all good.
Let's say you're trading altcoins and one of them went up in value, in Bitcoin value, but Bitcoin's been dropping down in USD value. So you're gaining BTC profit, but the value of that Bitcoin has dropped in USD. So your cost basis would actually be negative, even though you're gaining Bitcoin from the trade. Might be a little bit complicated, but
it's a play. Yeah, it's a play on the meme, in my opinion. You see these memes saying, I'm down in fiat, but I'm up in Satoshis. So, yeah, let's say you accumulated 2 Bitcoin over the year, but those Bitcoin went from 20K to about 6K, or I think the bottom of the year was about $3,000. So you're definitely down in USD value, but you've accumulated more property. Is it always the cost basis in USD value, or is there a way to play with that?
I'm going to let Lucas take this first.
Yeah, sure. No problem. So yeah, in this situation, it's always going to be your realized gains or losses in USD. So if you're able to do that and keep your net USD gain or keep it at a loss, you can totally still take advantage of those tax savings.
Okay. Interesting.
Right.
But there's no way to flip it the other way. It's always going to be in USD.
Okay.
Right.
Interesting. All right, cool. So there's a question in here about being audited. Will I be audited if I don't report my cryptocurrency gains? I don't know if we clarified exactly who, again, if I'm just a guy that put $500 in and lost my keys or whatever, I'm just irresponsible, or I just plainly forgot. Somebody offered to buy something from me with Bitcoin and I just don't even remember I have it and it's worth $50 or $100. Am I in trouble if I simply forget that exists, or how does that work, or is that something you can even comment on?
Yeah. I mean, we don't want to again, like we said before, we can't give specific tax advice. But I think some of the things to hit on are, one, right, if you got a 1099K from Coinbase, you definitely, right, I mean, everyone should be filing their taxes on this, but that's a big red flag because it's pretty easy because the IRS also got a copy of that. So right there, they know you're trading crypto, right? And so it probably makes a lot of sense to cover your bases. Now, it's universal knowledge that I think it's 0.x% or 1% of people, U.S. citizens ever get audited.
Right.
So just the chance of getting audited are slim. But yeah, we can't comment on, exactly if that'll happen. The one thing to say is the IRS has stated, they give out about 5 of their main initiatives for the year. And one of those was the taxation of virtual currencies. And that's not really to, punish traders. It's more to go after the people who are using it to launder money, right? Yeah. Crypto. But it is one of their huge initiatives. So, they're building out engines to flag in certain scenarios, right, where maybe they got something from Coinbase, etc. So, we always just tell people, I think it's better safe than sorry. But, if you really want to talk it through, you can always hit up one of our accountants that we list on our directory, and they'll be able to provide, a lot more information regarding that. But it's not a fun conversation, right? It's scary, and you don't want you never want to use fear like to motivate them to use our business, right? We just want to make sure people can stay compliant. But yeah, it's definitely not a fun topic to address and even think about, really.
That's actually, I mean, that's the nature of the entire accounting industry. I don't know that anybody, unless you're very wealthy, I don't know that anybody loves their accountant. So, well, it's tax.
Yeah, exactly.
I go see that guy again.
And
no, that's exactly right.
I just wanted to jump in really quick too. If you're one of the traders who falls into that bucket of you didn't know what was going on in a previous year, or you didn't think you needed to file, you can always go back using the IRS form 1040X and amend a previous year's return to account for those gains or losses.
Sure. Yeah, that's an interesting one. You know, I've been a Bitcoiner myself since 2012. And at the time, like, there were no exchanges. I don't even think Coinbase existed yet. And it was a peer-to-peer economy. So it was people like, hey, I'll trade you, 60 Bitcoin for some stupid thing. And it was like garage sale cash. And everybody was like trading it the same way that people would trade, Magic the Gathering cards or whatever else. I don't know that anybody really took it very seriously until companies like Coinbase opened. So I think there's probably a lot of people. I mean, James Howells, for example, is that guy who famously lost like 200,000 Bitcoins on his laptop when his girlfriend threw his laptop away. But that was in like 2011 or 2012. And like, can he go back in time and claim that loss and say, hey, look at this massive loss on my income? Is there any way to deal with stuff like that?
That's where things get so tricky, especially since there was no Coinbase back then where you can download your CSV file. I think that would be kind of stretching it, claiming that as a loss.
Yeah, it's complicated. It's just such a difficult thing when you're trying to blaze a new path. So I have to commend you guys for taking on the responsibility. It's a great idea, but I certainly wouldn't want to be the one to be like, hey, we're going to figure out taxes with this complicated new piece of tech.
Yeah, it's not what I thought I would be doing 2 years ago.
Sure.
But you try to solve the problem that presents itself to you, always. I guess.
No, and that's commendable. It's the right way to handle business, in my opinion. So
another question I had was, will the government be able to prove if I'm not reporting my taxes accurately, if I didn't get a 1099, or I've been trading on exchanges that are more peer-to-peer and not so much tracked by KYC stuff yet?
Yeah, this is another question we get a lot. And frankly, another one you see talked about a lot on all the forums and on Reddit, right? It's people saying, oh, I'm not going to report because the government will never be able to sort through what I did. Like, good luck to them figuring it out. And like, just being honest, it's not at all on the government or the IRS to figure out what you did, right? In case of an audit, what happens is they will come and be like, hey, I see that $20,000 came out of your Coinbase account into your bank. Show me what you did with that money, right? And if you can't have records and show, I did in fact trade this by this and this in Binance and it led to this $2,000 gain, well, they can just say, hey, you can't show any of that. We're going to slap you with a $0 cost basis on that entire $20K. So now you owe a tax on that $20K capital gain when perhaps you only made $2K, right? So it is a common misconception of how audits work, where people think, oh, I'm kind of innocent till proven guilty, right? The government's never going to be able to sort through this stuff because it's so complicated. I'm spread out on all these different things. It's no, they'll see it come into your bank account from anywhere and say, show me what you did with that money. And if you can't show them, right, that's when bad things start happening. Sure. You get slapped with penalties. So it's a good thing to try at least to educate on, right? Because it is a very, very common misconception because of how the courts work, right? Where like you're innocent and proven guilty. Not the case with the tax man. Sadly.
Yeah, no, it sure isn't. So that's fascinating. It's such a complicated thing.
It's another one that's like, yeah, I don't like to think about that.
It's interesting because people seem to think that the Bitcoin is anonymous. And I always point out Silk Road, like people thought that they're using something that doesn't keep a record, but the Bitcoin blockchain is an immutable record of everything
Exactly.
that happened. So given enough time, I mean, you could literally audit every single address that ever existed on the Bitcoin blockchain. And I like to point out that not just the proprietors. So it was Ross Ulbricht famously went to prison for ever. But it was also all kinds of the proprietors, but also the FBI agents who underestimated the auditability of the blockchain. So that's why I was asking earlier if the blockchain was going to be audited itself by your software, because I think people really just kind of misunderstand what the power of the blockchain is. And truly, it's a permanent record that you signed. It's a digital signature of account, and people need to treat it that way.
Yeah, no, you're exactly right. Like, exactly that. It's a public ledger, right? It's completely public. And there are companies, right, us included, that are putting research and development into figuring out ways to easily audit that, right? Because, you know, people, it's such a hot button word to talk about how blockchain can be used, but that is a very real way of how it's going to be used in the future, right? Is auditing, right? It's going to disrupt the financial services auditing industry, because it's going to be software that's auditing these giant organizations in the future, instead of having people go do it. So it's important to keep that in mind. You know, there's going to be software that's written that can just, you know, be unleashed onto these protocols and be able to tell you exactly where all this money went. You know, it might be a ways out, but it's very likely coming.
Well, and I think that's actually part of the dream too. I've had a conversation recently where they were talking about income tax, and if you know, we got this hyper Bitcoinization, right, and everybody receives their salaries in Bitcoin and everything else. Well, everything can be a smart contract and an app that, here's your tax bracket, and it just happens automatically. People punch in a number, click, and it's everyone gets paid. Like the tax man gets paid, but then it goes from the tax man's wallet all the way down to funding everything all the way down the line, from repaving the roads to, you know, whatever, buying toilet paper for the
it's a very powerful thing to think about, right? And this is with any innovative thing, right? Anytime you can reduce the friction, right, you're saving people money, you're saving people time, right? So imagine the world where I don't have to spend a week trying to figure out my taxes for Bitcoin, right? Or whatever it might be, you know, that's a very powerful, and that's, you know, that's why people get real hyped up when they start thinking about the possibilities of blockchain. I think it's a long ways out, but you know, that's also why you see such big investments going into this space, which is, you know, Andreessen Horowitz just raised a $300 million fund that they're only putting into cryptocurrency companies. So it's big bets are being made, and I think, you know, it is exciting in that sense.
It is, absolutely.
I think Kurt brought up a good point there about employees. And what would you do if you're an employee of, let's say, Binance, and you're getting your entire salary in BNB? How would that work?
So that's just treated as income, right? So same as income from my job, right? I make X amount of money and I owe income taxes. So the way you determine how much you owe, right, is you peg the US dollar fair market value of that coin that you got paid in at the time you got paid, right? So if I got paid 10 Bitcoin over the year for, you know, let's say $80,000, well, depending on when I got that money, it would just be the fair market value, and that's the tax you owe. Does that make sense? I don't know if I hit on that perfectly, but it's pretty easy. You just need to know what US value.
So if I hold those Bitcoin, don't sell them?
Yes, so because it's income. So income is different than your capital gains and capital losses, right? So those get triggered when you trade it. But if you just earned it, it's treated just like income, you know, W-2 income, and you'd have to report that. And the way you report the amount is by using the fair market value in US dollars at the time you received it.
Fascinating. So it's pretty straightforward.
Now, the trouble is, right, is they make this Bitcoin in income, right, and then they go trade it. So that's both taxed at the income level and then at the capital gains or losses level.
Right.
If that makes sense, right?
Yeah.
Sure.
So again, it gets a little bit tricky, but actually not too bad, right? All you have to do is plug it into any crypto tax software and it'll tell you what the fair market value was of that crypto that you earned in income at that date.
Sure.
Right.
Mhm.
So are there any common deductions that a crypto trader can make, or is it only if you're a business?
Yeah. So, I mean, the common deductions are just if you took a loss on your trades, right? Because that is, you can write that off, or it deducts on your capital gains. If you're just a normal trader and you don't have a formal business entity set up for, like, if you're an intense miner, right, then you have to set up some type of LLC, right? You can't like deduct, the cost of my membership to, what's Gunbot or whatever you're using, right? You'd have to be a business entity. Yeah. You'd have to be a business entity to be able to deduct those expenses before it hits your net income.
Okay. Very interesting.
So something, and this has to do with Canada, but I think it could be applicable to the U.S. too. And if you guys didn't see the Canadian government, I don't know what their version of the IRS is, but they started sending out these forms asking for people to write down all their addresses they've ever used and asking all these questions about people involved in crypto. I know the U.S. they aren't doing it yet, but it's very possible they could. Well, what if you haven't been tracking your wallet addresses that you've been using?
Man, I haven't looked too much into that. I hadn't even heard of that exactly in Canada. That sounds like a nightmare. Honestly, we don't do that to date. Lucas, any thoughts there? That sounds
so
scary.
I guess it kind of depends from, I guess, trader to trader or how they've been using those wallets. But probably the best way to do that would be start looking backwards from the deposit withdrawal histories on the exchanges. If they've actually sold it, you can kind of work backwards on how those coins were transferred and the amounts. That does get tricky though.
Yeah, I can imagine, because there's a lot of businesses that exist or that are trying to exist off of micropayments, for example. Like if you're running let's say you're running an online casino and there are people placing penny bets all day using Bitcoin, they just have to have an immense amount of addresses just full of dust, basically. And I can't even imagine what that would be like operating something like that, because they're not trading, but they are creating, potentially hundreds of thousands or millions of addresses with pennies in them. That's just sounds like a colossal beast.
I can't even imagine.
Yeah.
My suggestion would be, if you're dealing with lots of addresses, it is to keep very good record keeping on your side.
For sure. Yeah, absolutely.
So there's a lot of people that just have like home miners, not large scale operations, but people have one or two ASICs and they're just mining in their own personal home. So when they're getting cryptocurrency, is that taxed as income, or if they sell, is it capital gains?
Yep. Another good question. And it's both, right? So when you mine it, right, that's a form of income, right? So if I mined, Ethereum, and I got 5 ETH on January 15th, well, right there, that's income. And I need to know the US dollar fair market value of that disbursement that I got, right? And then if I go and trade that ETH at a later date, or maybe the next day, well, again, you need to know how much you made on that trade, because that's treated as a capital gain or a capital loss, right? If it's gone down in value since you earned it. So it is treated as both in that sense.
Okay. Fascinating.
Yeah.
Any insight into like the direction that any of this is going from the IRS's standpoint? I mentioned earlier the tyranny of ambiguity. I think people are just afraid. Do you see them coming out with more clarity, or do you think they're just kind of want people to fear report and, and just keep going that direction? Or do you think there are people out there like working for the government who want to create clarity and then create a place where we can become an economy that functions on Bitcoin in an easy sense? Do you have any kind of insight on that kind of thing?
Yeah. If we had very, very good insight, we'd be planning for it. No, we asked the same questions to a lot of people that we worked with to build this stuff, right? Because it's our job to stay on top of it, and we constantly follow it. There's constantly new bills and things that you read about, right, that are good buzzword stories of, this bill was passed and it's going to change the things. But honestly, from a federal level, I don't see them making it like a true currency, right? And that's a good topic to kind of touch on is, none of this is, first of all, it's not treated as a currency, right? Like we touched on, it's property. But the other thing is, it really is being treated as a security, right? People are buying these assets in hopes that they go up in value and you see a return, right, on your money. And that's just a fact. And so in that sense, that is a security, right, which should be taxed for capital gain or a loss, right? You save money on it. And so I could see in the future, like Bitcoin being the tax rules changing. But when you look at like the ICO craze that happened, right, those truly were securities. So I think it helps to like look at it from a perspective of what's it truly majority being used for? Is it speculation or is it truly being treated as a currency? So it's something that, like I said, we watch really closely and we're working with professionals in the space. But to your point, it's anyone's game of like where it's going to go. I don't know exactly, but I'll be curious to watch it.
Sure. Yeah. No bold predictions out of you on the price of Bitcoin in like 2025 or anything like that?
$1 million Bitcoin 2025. Telling you right now.
All right. Beautiful.
No.
I got the McAfee bet going here.
Yeah. Throw out some good just buzzwords and articles so we can just get this thing going.
Yeah, absolutely.
So there's a lot of people in Crypto Traders Pro that are not necessarily, they're not in the US. So we have people in Europe, we have people in Australia and Canada. Do you guys offer any solutions for people outside of the US right now?
Yeah, I'd like to quick defer this one to Lucas because the core of it does not need to be geographic specific. And Lucas, I know you can touch on that a bit more and then we can maybe go into our plans of expanding to different markets.
Yeah, absolutely. So like the way that, like with the kind of like the exception of Canada, who uses the adjusted cost basis method, most countries use the kind of follow the same practices for using the net gain and loss calculation on the taxes. Right now, our platform for like the reporting, we generate like the IRS 8949. That's obviously specific to the United States. But in the next upcoming years, we do plan on expanding support into other countries. But unfortunately, at the time, most likely not going to have that ready by the end of this tax season.
Sure. Well, yeah, that's a lot.
But we do support multiple currencies, right? And so, Lucas, feel free to jump in. But if you just want to figure out how much you gained or lost in your currency, that's completely doable on the platform.
So what would be an application for that if I was an American living in Japan, for example?
Or if you're just based out of Europe and we're using Coinbase, trading Bitcoin in and out of the euro. So it'll calculate your gains and losses.
Gotcha. Makes sense. Cool.
But yeah, so the future, so we're going to be expanding into Australia and Europe here in the near future. So the plan is to start serving many more markets, but we started in the US, right? And so we're going to dive into future ones here soon.
Do you guys hang out on like Reddit or Telegram? Do you have your own channels for any of that kind of stuff?
I mean, I'm on Reddit all the time, Telegram as well. We haven't built out formal channels for the tax input. As much as people want to be talking about the tax implications of this stuff, right? It would be a thriving community, I'm sure. Right.
Yeah, the new hot subreddit.
Yeah. Come invest in this tax platform. No. We don't at the moment, no.
Okay.
So I know this might not be applicable in the US right now, but there's a rise of these exchanges offering futures contracts and derivatives trading. Some of them, like BitMEX, they don't want US citizens on there right now, but there are other platforms like that are starting to come out and offer US trading. So is this treated the same as just trading normal cryptocurrency?
Yeah, Lucas, do you want to take this one?
This is something that is like so very unique kind of to like the trader situation, and especially from what country they're coming from. I think at the moment, there's very few platforms, even in the US, that allow this kind of margin or leverage trading. For these leveraged traders, I would just suggest talking to a CPA to get this sorted out, because that
it becomes very, it becomes very difficult from building software perspective to track this stuff. Like very, very difficult. We've dove into it, and we're still diving in and building out solutions. We don't have anything built out robust enough to handle this. So the best bet we would recommend is, hit up our CPA directory, talk to someone, because like to your point, it does complicate things, unfortunately, when you're doing leverage and margin trading.
Yeah. Well, and then even, CME and CBOE offer paper Bitcoin contracts. So they're not actually taking ownership or custody, but they have custody of a contract for Bitcoin. So I think that's really your only legal option in the US is to go through CME or CBOE at the moment. Do you get any of those clients or no? Would that be a different situation?
Yeah. I have not seen that once, and we have thousands of users. So we haven't seen it.
Sure. So do we got anything we've missed or anything you wish more people would ask you?
What's a good thing? Lucas, I'm racking my brain.
No, I think you guys covered everything pretty in detail here.
Cool. Well, it's a fascinating project. I know it's one of those things where you don't want to talk about running a business for the sake of, well, let's minimize taxes. I don't think any entrepreneur gets into business to think about tax problems. And I think it's the same thing with traders. I think a lot of people came in 2017 thinking they'd buy some Bitcoin and retire young and it's going to be great. And if I end up being a millionaire, then I'll pay my tax bill when I get there. And now it's like, actually, we need to take this seriously. So I really commend you guys on creating a product that makes this easy, especially as a professional trader myself. Was there anybody that deserves a shout out or, hi, mom and dad, or how would you like to wrap this one up?
No, I think we can just touch on the platform just to kind of summarize things up. So again, for the millions tuning in, it's Crypto-Trader.Tax, but like we touched on before, maybe not the sexiest or most thrilling business to be getting into, but honestly, like our motives and thoughts behind doing this was to solve the problem and to try to decrease some of that anxiety that comes with it, and then just to allow more people to get involved in the space, right?
Yeah.
So we don't like to use the tactic of fear to get people on our platform, which you'll see in the space a lot, right? With a lot of these accountants are saying, you're gonna be audited, you gotta give me 2K so you be safe. We don't want to use that in marketing. We just want to make it easier, right? And just allow people to have a platform that they can feel good about. So that's the process. I did want to just iterate that. We have over thousands of people on the platform now. The software is very, very stress tested. It's getting better all the time. And so we'd love if you guys can check us out, shoot us a message over intercom on our platform. We're always talking to people there. Would be happy to have anyone. And, thank you guys for having us on your blog and your platform. We really appreciate it. So it's awesome to be here.
Yeah, no, we appreciate you guys coming on. Everybody, please, Crypto-Trader.Tax. Pay your taxes. Don't make us all look bad. I feel like so many people come to crypto and decide they want to get into crime. There's a new movie coming out called Crypto that looks like a money laundering scandal movie with Kurt Russell in it. And it's like, that's not the attitude that we need to be showing the world. Like, there are so many legitimate business people and people that just people like you and me that
totally
want to get involved. We're interested in Bitcoin. We're interested in decentralization and creating the future here, and paying your taxes and being an upstanding citizen is part of not being part of the criminal element here. So.
No, I'm very excited to look back in 10 years right at the space. Similar to the start of the internet, you look at what was there, and obviously I was too young to know, but you hear about the first browsers, and everything is so unusable. And now 20 years later, it's the greatest thing ever. And I'm so excited to see, 10, 20 years out, the infrastructure that gets built out to make this stuff so easy. That's what we like to compare ourselves to is, hey, we're trying to build this infrastructure to make it more accessible. And we see so many other services doing the same thing, right? And it is exciting, right? I think anyone who's getting involved this early, despite the crypto winter that we've been through, I think it'll be cool to be able to say, hey, we were there kind of in the beginning. You much more than me, right? I got in on the hype.
That's all right.
But I think it'll be cool.
Very cool. So thanks again for coming on. Please, everybody, subscribe, check out Crypto-Trader.Tax, and please join us at CryptoTradersPro.com, where we will be posting these videos and blogs. Please subscribe to our YouTube channel, subscribe to SoundCloud, iTunes, Stitcher, Amazon, Google, and everywhere podcasts are consumed. And everybody, we will see you on the moon, quite frankly.
We'll see you on the moon.
See you on the moon, everybody.
Thanks, guys.
See you guys.
Yep.
Thanks for having us.
Thank you.